Markets tumbling today as a surge in coronavirus cases weighs on investors. But if you're seeking shelter in this storm, the Chartmaster has not one, not two, but three of the safest charts in the market, so he says. Let's get to Cornerstone Macro's Carter Worth. Carter.
All sorts of good stuff. But before we look at them, you guys were talking about, obviously, the big question, don't fight the Fed. Listen, the Bank of Japan has been entering in program after program for a lot of years. Negative rates, buying stocks, and the Nikkei peaked in 1989. It's not necessarily the fact that the Fed can save this. Let's look at a few charts. First, the S&P. What we know is, of course, you have a collapse. You can see that there. You have a ricochet. And we have now a breakdown below the trend line that's been in effect since the March low. Now, to be fair, in the early part of April, we had about a 7% sell-off. In the early part of May, we had about a 7% sell-off. And here we have another 7-8% sell-off. So is it a buy the dip? A lot of people believe that. The break in trend is my issue, and I think there is more downside. In any event, the first of three very sort of defensive areas of the market. Let's look at gold. We know that gold is sitting at well-defined tops at a common level. Take a look at the first chart. So the importance of the 1785 level, you can see it there. You can draw the lines however you want. But what we know is it's toying with the prospect of breaking out above those tops. Now look at the second chart and look at the authority of the 1785 level, not just in the first chart, but see here, you can see it goes all the way back to 2012, meaning this is a very big juncture. And it takes a lot of buying pressure to clear a former high. But once you do, you're often in free sky, free to move higher, no supply. So to that end, look at the third chart. And you have here, I've included back to the peak in 2011. We know that gold did peak in the summer of 2011 at $19.25 an ounce or thereabouts. And there's not much supply ahead. It was only 3 months of trading where gold was above where it is now. And so any movement here, and we think it's going to be very dynamic, right, will put in play the highs and then ultimately much bigger highs. And then finally, take a lock at gold and its relationship to all commodities. The fourth chart for gold is a two-panel. You see on the top panel, that's gold. We're basically back at the highs. But look at its relative performance to all commodities. On the bottom is the all commodity index, and it's equal weighted. So orange juice, cocoa, sugar, corn, but also oil, natural gas, aluminum, tin, copper. And gold is just steady and orderly, making new all-time highs. It's a beauty. So one area. Second area to consider, I have here a two-panel chart as well. And what this is the towers combined. So it's American Tower, SBAC Communications, and CCI on top, plotted as a basket, as one security. And they're REITs, of course, but their characteristics are very defensive. And on the bottom, the sector that has the lowest beta of all sectors is the staples. So the bottom line on the two-panel chart is the basket's performance relative to consumer staples. So we see absolute performance up and to the right out of AMT, Crown Castle, and SBAC, but their relative performance to the most stable area of the market, staples, with a beta of basically 0.7, is also making new highs. And then finally, a third area, just picked one stock, Lilly. Look at that chart and look at that big move 2-3 weeks ago, huge pop off the 150-day moving average. Good news, phase 3 in their breast cancer drug, but either way, a steady, orderly, defensive name. So you have gold, you have the towers, cell towers, and you have a nice, large cap, steady drug stock.
Carter, thank you. Carter Braxton Worth with the three defensive charts. Guy, I know you're a sucker for two-panel charts. I know I am. I like to see the relative performance on the bottom. But which would you like to, which one do you like the best?
Whoa, gold, no question about it. But did you catch Carter dropping some Luis Yamada stuff there? I mean, he went straight to the bigger the base, the higher in outer space, or something to that effect. I'm totally digging it, even though I'm not seeing him. One. Number two, gold, absolutely. Gold is breaking out. The miners have pulled back, starting to rally a little bit. And if you do see that weakness in the U.S. dollar that I anticipate, I think that's going to add a little turbocharge to this gold move. So for me, out of the two-pronged attack or three-pronged thing you just told me about, Carter, would be GLD.
Tim?
Yeah, I think if you look at the gold chart, the relative gold chart, I like the bottom panel because I think what's most interesting about gold is it may also, though, be pulling other commodities higher, or at least the message is on the weaker dollar. And remember, commodities don't necessarily move year to year. They move in 5 and 10-year clips. And the last time we had a real commodity supercycle, it actually began in 2002, 2003. That came after a major recession. I'm not saying the conditions are exactly the same, but I think that's what's interesting. There's no question to me gold is going to all-time highs. It's a question of how high. Carter thinks extremely high relative to the old highs, and I think he's right. But I think other commodities are also worth owning here.